Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Protect and Grow with Chicagoland certified financial planner Tim Stearns of TJ Stearns Incorporated. Trust, respect, and results. TJ Stearns Incorporated focuses on comprehensive financial planning and benefits.
And welcome into the program. This is Protect and Grow, Chicagoland Retirement with Tim Stearns, CFP, and your resource, ladies and gentlemen, for a common sense approach to planning for your money, with your finances, your investment, and for your financial and retirement future. Tim, we always appreciate the time and the guidance and perspective that you provide here on the show.
Peter, it's my pleasure to be here.
Well, it's great to have you along and to get that perspective, Tim, because I think that savers and investors right now are reasonably concerned about where the market is and the risk that we are taking and the volatility that we have seen. Are you hearing a lot of people that have expressed concern about that?
Yes, that countered with also, accompanying of the inflation being so high, people are very concerned because where else are they going to get a return, right? That's going to stay up with inflation, but equities. So we're seeing a lot of people who are, they don't know which way is up, as they say. So we're trying to help them through that, without, if we have a lot of retirees as clients or got people that are about to be retired. And the last thing we want is for them to go take undue risk just because they're trying to keep up with inflation, but they're skittish to do it because of the market being so volatile.
Well, you said that four-letter word, risk. We've been taught, Tim, that we have to take risk as part of the financial picture, as part of making progress, as part of our hopes to achieve gains. But risk is kind of a fickle friend. It can go two ways, can't it?
Absolutely. It can hurt us, and what we found is that there's a lot of people out there that thought the market would just keep going and going and going. And then, things cropped up overseas. We have inflation here with the Fed raising interest rates, to try to stymie that. There's a lot of things going on that I don't think people really remember seeing all this. Inflation being at 8.5%. It was just announced the other day, the highest it's been since 1982. How do we combat that is what I'm being asked a lot.
Well, Tim, I think it's a fair question, and we're going to be talking a lot about risk. What is appropriate? How do we quantify it? How do we know how much we're taking? And how do we gauge if we are taking the right amount? Too much, too little? It's kind of a three bears kind of scenario. We want to get it just right, but that is difficult without the perspective and guidance of a qualified, experienced professional helping us, looking us over our shoulder, or structuring the plan along with us. And ladies and gentlemen, as we talk about this topic on today's program, I do want to remind you that is what Tim Stearns, CFP, does for and with his clients, is help you manage those assets and investments and the risks that you may be taking with your money. Make sure that you are taking only where appropriate and what you need in order to achieve and accomplish your goals, and including that as part of the comprehensive picture and in a plan to help you make forward financial progress, regardless of what market conditions may bring. So if you'd like to have a conversation with Tim, if you'd like to take advantage of the offer that he gives on this program for listeners and viewers to have a forensic financial analysis, a comprehensive review, and a complimentary strategy session, pick up the phone and give TJ Stearns Inc. a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Now, Tim, there are probably many types of risks, but for the context of this conversation, we're really talking about those risks that we have when we invest our money in the market, kind of stock market risk and what goes along with that. So talk to us, if you would, and sort of help define what is risk and then where is it appropriate to take that risk?
Well, risk is truly, losing your money. And that's the biggest fear people have, the fear of loss, right? especially if I'm about to be retired, or if I'm, living on a fixed income per month. If I lose something in the stock market, it's tough to get it back. Most people that we see are net sellers of assets in retirement. Whatever they had on that last day of their 401k on the job is what they have forever. So you have volatility, and then you have inflation. So they want to be in the market, to stay up with inflation being at its all-time high since 1982. And you have people getting scared in the market. So maybe they run into bonds. Then you have the Fed raising interest rates, which will cause the bonds that are currently out there to lose value. It's a double whammy for a lot of these people who are trying to figure out, which way is up. So what we do is, if they've done an income allocation plan, it's okay. We've allocated for income. That will be fine. But if they have not done that with somebody, they need to get in here and talk to us about how to get an income allocation plan. I couldn't believe that 1 out of 10 Americans have a plan, I'm amazed at that they think they got it all under control. I mean, there's so many variables that go into retirement. We learn this in our classes all the time. And again, we're doing them in May and June to help the public. And I would tell anyone who wants to attend a class, or they can do a Zoom, give us a call. We'll get you into the class. You will leave with some type of information that will be to your betterment.
Well, 9 out of 10 not having a plan, then numbers guy that I am, figure that out real quick here, Tim. But that is appreciate it. That is a scary number, not having that plan. And the plan really, Tim, can give us guidelines to stay within, and can help set some parameters, and can help set benchmarks to make sure that we are making progress. I think that is an important part of achieving what goals we may have for the future is the plan dictating what those goals are, and then what we need to be working toward, risk being part of the plan that we need to manage along the way. Now, here's the thing, Tim. I think that most of us investors, those with accounts, those with exposure to the market, may not fully understand the implications of what risks we are taking. Is that something that, as a CFP, a certified financial planning professional, as somebody who's working with your clients, that you can help them better understand and quantify the amount and the level of risk that they are taking?
Absolutely. The biggest thing that you could do is take a risk analysis step with us, which is just going through an exercise to see what it is that you have out there that can actually lose principal. All right. So what we do is we send an email. They would tell us then, what they feel like. A lot of people say, well, I've done those types of things in the past. Well, this is pretty cerebral, and we'll cover the gamut for people. And so we can actually ascertain what their risk level is. And then once we take their statement of what they currently have and put it in there, it can give a very telling sign that if the number's real high, they're taking way more risk than they want to, especially if you're in retirement or nearing it. The last thing you want to do is, let stocks take over where you're meant to have a split, 100 minus your age, that type of thing. It doesn't work. And so you have to make sure that you've had a 13-year bull market, and up until a couple months ago, bonds were actually losing. So we've seen stocks cannibalize where the bonds used to be, right? And the bonds have shrunk, and now they don't really have a lot of less risky portfolio. They have a very high risk portfolio, and I don't think some people realize it, or they bury their head in the sand and they hope for the best.
Now, Tim, you mentioned that the 100 minus your age doesn't really work anymore. That's kind of the old rule of thumb, the guidance on how much risk we should be taking. It was called the rule of 100. I know that as we get closer to actually using our dollars to make withdrawals, to create income, to live off of our investments, we are supposed to head toward a less risky kind of position. Is there any kind of guidance or rule of thumb today that does work to help us determine how much risk we should be taking?
Yes, I think you need to look at vehicles that maybe have a good track record, that have stop losses in them, that will time out if the market goes down precipitously, like in March of 20, when the market went down 24%. There's portfolios out there that actually went to cash, and you hear the old adage, oh, well, you got to be right twice. I don't believe in that. I think, you can do that nowadays with all the computer programs that are out there using algorithms and that type of thing. There's no guarantees. I'm not saying that, but I am saying there's a better way to do it than what we've done. The buy and hold does not work. That is your grandfather's stock market. We are not living in those days anymore.
Because on one side, Tim, we don't want to miss out. We don't want to not take advantage of the true potential that the market does give us, the upside of taking risk.
Exactly. I mean, people, what motivates human beings? Fear and greed, right? Fear of losing the money, but greed that Joe Blow next door to you is making more money in the stock market. We have to be careful not to get away from the memories that we had in 2008 or 2000 through 2002 when the market went down 50%. Those are the times you got to remember, even though they were years ago. The difference being is that we were younger then, and now you're older, and now you're getting ready to retire, and you're not going to be filling up that bucket that had a hole in it in 2000 through 2002 and 2008. Now is the time to batten down the hatches and really get a skilled portfolio that is going to take care of you in retirement.
So the other side, the downside of risk, those periods that you just mentioned, while we want to have growth and gains and make progress, we've also got to be aware that the market moves both up and down. Right. And yes, it's gone up over time, but there have been specific periods of time where it's gone down pretty substantially. And I think that's where right now, a lot of people are, in my opinion, justifiably concerned, but I guess that's the question. Are we on thin ice right now? Is the concern justifiable?
Well, a wise professor, when I went to DePaul University, told me, you know what a bull market dies from, Tim? And I said, I have no idea. And he said, euphoria. And where were we at the end of 2021? Euphoric. Nothing's going to stop us. Market's just going to keep going for a 14th year of a bull market. And then things happened overseas and inflation went rampant, et cetera. And these things derailed that plan. So now we have to rethink our retirement. And that book, Income Allocation, it speaks to that you need to rethink it. You need to have active money management. You need to have a fixed income bucket that's guaranteed income. These things help people sleep at night and helps them get through a volatile market.
And by the way, Tim does mention the book, Income Allocation. This is an essential retirement planning strategy guidebook. It is being used by savers and investors, as well as advisors all across the country to help better understand the risks that we face in today's modern retirement and how specifically to structure the assets and the accounts in order to address those risks, minimize them, or eliminate them where possible. If you would like to get your hands on a copy of this book, it is a relatively easy read. I'd say an airplane read, about 2 to 3 hours. You can get through it and have a really good handle and understanding on what risk retirees face, and then how we can actually address those risks. Pick up the phone, give Tim Stearns a call. He makes an offer on the program for the first 10 callers with at least $500,000 saved for retirement. You can request and receive a copy of Income Allocation, this fantastic book that details how to structure the assets for a more confident, stable, and secure retirement. 800-640-2256 is the number to call. That's 800-640-2256. 800-640-2256. So, Tim, there are both reasons that we need some protection or to help to offset risks. And there are also options that can help us to offset or reduce the amount of risk that we are taking.
Exactly. And I think that comes through having better investment vehicles, vehicles that add stability to your portfolio by having stop losses, by having an income play, that are going to pay the bills. Okay. And that you don't have to draw off your investment portfolio if it has taken a hit. I like that plan for myself personally. My siblings, who are all in their 60s, are using the same type of plan. This is what we do here, is that we make sure that people can try to get through a successful retirement. Life happens, as we've seen in the markets. with our families and that type of thing. And you have to make sure that you're prepared for the worst and hope for the best.
You've stated and often repeated on this program, but I think it rings true that we only get one shot at that ideal retirement. And we really don't want to make mistakes, especially moving into retirement during the transition period. So I think that it's important for savers and investors to understand the options that are out there, to understand the risks that they're going to face, to understand how to structure the assets to address some of those risks and avoid some of those potential mistakes, or maybe not even so much a mistake, but a force outside of our control that can impact our well-being and our retirement outlook. And again, ladies and gentlemen, if you would like to take advantage of the offer to sit down with Tim Stearns, CFP, to formulate the plan, to review and double check a plan, or if you would like that book for your educational purposes on how to structure the assets to achieve such a retirement, pick up the phone and give a call, request income allocation, request the complimentary review and strategy session, 800-640-2256. That's 800-640-2256, 800-640-2256. Tim, you brought along kind of a list and outline of a sound approach to volatility. And you covered that on the list. And we wanted to talk about what are some of the steps that really constitute a sound approach to market volatility. What do we need to be doing or thinking about in periods where we do see that market volatility? What is the best thing that we can be doing for ourselves to make sure that we're making forward progress?
Well, first of all, don't panic, right? I mean, remain calm and realize that you'll live another day, but you need to also make sure that you're going to make changes for the betterment. We always talk about in our retirement classes, what's the definition of insanity? Doing the same thing over and over and expecting different results. Well, we still see people using asset allocation as their strategy, and that's not a retirement strategy. That's an investment strategy. So we need to rethink how we're doing retirement. And that's why the name of our class is called Rescue Retirement. So what we try to do is make people informed, telling them, they need to rebalance, maybe in a down market, when the market has gone down, maybe then you become more aggressive. But a lot of people, hop out at the wrong times and they buy in at the wrong times. By being disciplined in how your retirement is planned out, that you can overcome these things.
Tim, you mentioned that asset allocation is an investment strategy, not a retirement strategy. What's the difference and why is the difference important there? And what do you mean by that?
Well, when I see asset allocation, I think of most of the people that come in here, I think of two classes of investments, bonds and stocks, and they both are correlated. An income allocation plan would have something in there that would be not correlated to the stock market. All right. So the income, the asset allocation model that people have used for years and years has failed us over 5 times, maybe a 6th time right now in the last 22 years. Again, the difference was we were younger then. What we should do now is change that model and look at income allocation by maybe using an annuity, maybe using something safe that was going to throw off a money stream to you, an income stream that will take care of you in a down market. It doesn't matter right then. Maybe you don't go on that trip that year, but when the market comes back, maybe you can do that. So these are things that, you got to be able to pay your bills, right? And then the other things come in hand down the road. But if you have a plan, you're going to get through that. And, that's your best shot at a successful retirement, is by having a plan.
Well, we got to have that plan in place, ladies and gentlemen, to help us keep a sane, level head, not a knee-jerk reaction when we do see volatility. That alone will help us to continue to make the forward financial progress that is necessary to achieve our goals. And Tim Stearns, CFP, helps individuals and couples construct those types of plans each and every day. If you would like to take advantage, pick up the phone, give TJ Stearns Inc. a call, 800-640-2256. That's 800-640-2256, 800-640-2256. So Tim, we've been taught, we've really been trained about the necessity of taking some amount of risk with our money, with our investments in order to make progress. But there is also a reason for safety with portions of our assets as well. And that can be a very valuable lesson to also reinforce.
Well, I promise you this, if I'm in retirement and I know that my money is coming every month, like a pension from an annuity, I'm going to sleep better at night. The growth model, where the growth money is, yes, it's going to be, there could be bumps and bruises in there, but I know every month I'm able to pay the bills. And we try to explain that to people, that when you do an income allocation plan, that's taken care of. That's what you're doing. And it's all in the book. And that's why we're happy to get it to people's, into people's hands. I also will say the retirement class follows along with the book. So if people want to do Zooms or come in person, we're just outside of Chicagoland in Schaumburg at the Roosevelt University for our classes. And, they're excellent classes. All of my siblings have gone to them. They're all baby boomers, just like most of the people listening out there. And they've taken a lot of great takeaways from it.
Again, if you would like to attend, find out when that class is, where it is, make that reservation, pick up the phone, give a call, 800-640-2256. Investors, savers all across Chicagoland have benefited from attending one of Tim Stearns CFP's retirement rescue classes, but many more need to hear this important information. If that's you, ladies and gentlemen, just sign up. It is a complimentary additional educational opportunity for you to learn more, be more informed and educated when it comes to your money, make better decisions as a result. Pick up the phone, give a call, 800-640-2256. That's 800-640-2256. Coming full circle here, Tim, and halfway back, we have been taught, we have been trained, we have been told the reasons why we need to take risk with our money. But there are also reasons for safety. And I think at its core, one of them would be to cover day-to-day expenses. Typically, we're not taking a lot of risk with our checking account, or in case of emergencies with our savings account. And many of us keep a little bit extra just for reasons for comfort. But another one, a big one, especially important for retirees, is the income generation power. And I think that's where there's a pretty big difference between what the old kind of traditional asset allocation, modern portfolio theory would tell us to do, and what we have seen problematic for retirees over the last 20 to 30 years.
Well, it is problematic because nowadays, because most of the people back then had pensions, so they could take a little more risk in the market. Nowadays, we don't have that. Where are you going to get a guaranteed income from besides an annuity nowadays? So there are great annuities out there. The principal's protected, your gains are protected. And what they do is they throw off an income that you're not going to outlive it. Most of them are lifetime incomes. So, and you could do it based on you and your spouse. I mean, it's a win-win for people. And, are they a silver bullet for everybody? No, of course not. But at the end of the day, it's another solution to beat the volatility in the market.
Principal protected, gains protected, income protected. Tim, what's not to like about that? Now, again, not right for all of your money, but there is a portion and a place, specifically when we are in our retirement years, where I think that, or those qualities would be very attractive.
Right. I don't know who wouldn't want to know that their check was coming on the 15th or what have you every month, that they know that they're getting their money regardless of what's going on in the volatility in the market or overseas or inflation or the Fed. These are all things that we take into account here when you do an income allocation plan. And I'll keep saying that until I'm blue in the face, but it's really important to have a plan, because not having a plan is having a plan. And I think you're playing with fire.
Well, Tim, again, you make your time available, you make resources available, books, educational classes, the retirement rescue class, or the one-on-one complimentary strategy session, the plan design, a forensic financial analysis, and then honing in on what is the best path forward for specific individuals. And these are all fantastic ways that listeners to this program really can get more information and can feel more confident about their money, regardless of where we think think the economy or the market is, or the volatility and headwinds we may be facing. If you'd like to take advantage, ladies and gentlemen, pick up the phone, give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. If you'd like to receive that book, Income Allocation, be one of the first 10 callers to the program with at least $500,000 saved for retirement. And you can request and receive Income Allocation, the retirement resource, the essential planning guidebook and strategy guide. 800-640-2256. Tim, before we wrap up here, what are some of the best or some of your favorite places where we could potentially continue to make progress or stave off some potential volatility if we've got unwanted risk or we are risk adverse?
Well, there's a couple places. There's multi-year guaranteed annuities. There's, fixed index annuities are some of the things I like. They are not correlated to the market, which most vehicles are that I've seen in our office. Obviously, you could do CDs. Interest rates are starting to go up. They're not up anywhere near where inflation is, unfortunately. But those are some of the vehicles that we're using for our clients to try to stave off volatility and losing money to inflation.
Well, if you would like to find out more, ladies and gentlemen, pick up the phone, give Tim Stearns, CFP, a call, sit down, find out what is appropriate. I mean, Tim's got access to just about every type of financial vehicle or product or option that is out there and can help you evaluate them all after defining your goals and figuring out what is the appropriate mix, what is the appropriate selection, can help you analyze and review the risks that you're taking, the fees that you're paying, the taxes that you may be liable for, can bring it all together into a cohesive plan for generating retirement income and creating legacy. Those are the top goals there and the top items addressed in Tim Stearns' plans that he helps design for savers and investors, listeners to the program, viewers of the show just like you. 800-640-2256. That's 800-640-2256. Tim, always an informative discussion with you, and we appreciate the guidance and insight that you provide when we're dealing with these complex decisions and issues, what to do with our money.
It's my pleasure, Peter. Thanks for having me.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program on 890 WLS every Sunday at 11 a.m. and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.